Thierry, great to have you with us this morning. Thank you so much for joining. I want to ask you about the buyback program first. Is this a way to appease investors who might have been skeptical up to this point about your targets?
Not really. First of all, good morning. The 500 million share buyback that we now newly announced is in line with what we said previously, that we want to get to a leverage debt ratio between 1 and 2 by the end of 2020. We are almost unleveraged to a large extent by the end of this year. So this is the 500 million is one of the first steps to basically get to that leverage. So that was already inherent in our plan. I think the appeasing of the shareholders, I think we do that pretty successfully with the results, a 23% increase in the quarter year over year, the 5th consecutive quarter that we have increases despite relatively adverse market situations. So I think that appeasement is happening in that category. This was just part of the announcement we did last quarter.
So in terms of your guidance then as well, you have reiterated that 2020 adjusted operating margin guidance. How are you going to get there?
Well, I think we've been getting there methodically. This is about 2 years ago exactly that we announced this journey. We were at about a 10% then. We're at 13.8% business return on sales. The goal is to go to 15%. So we've done it and we will continue to do it by looking at good margin management, our pricing versus the raw materials. We'll do it by looking at cost savings. But more importantly, there's a lot of work the team is doing to get this Dutch icon into the modern age on computer systems, procedures, processes, etc. So we have, as a team, pretty good confidence that we will get in the very ambitious target we set ourselves now 2 years ago.
Yeah, and analysts certainly have called it ambitious, Thierry, and some of the improvement that you were seeing last quarter was mainly due to cost saving and pricing plans, and you've mentioned cost saving, which helped buck a weaker trading environment. That's what we learned last quarter. This quarter, how is the trading environment?
The trading environment hasn't changed a lot. If you look at all of our key markets, automotive is one. We don't have the biggest exposure to automotive, but it doesn't help. There's a little bit less than 10% exposure of the company in coatings that go into automotive. Those key markets are down for everybody. So we're pretty happy and actually pretty relieved that our whole 15 by 20, getting to 15% business return on sales by 2020, that was based largely on self-help, getting ourselves in good shape, looking at our costs, our pricing, etc., and that's working. The trading continues to be relatively sluggish out there. It's not exactly bad, but it's like subdued in most of the key categories, with some notable exceptions. The positive ones are packaging. Canned packaging is obviously pretty much increasing because plastic packaging is more under pressure. Aerospace continues to do well, and in fact, as you just indicated, significant parts of our decorative paint business is doing well. Powder coatings, where we are the global #1, is continuing to grow, so we definitely benefit from that. But it's largely self-help and what we have to do ourselves. So that gives us a confidence that despite what's happening in the market out there, we are continuing to make excellent progress towards our goal in 2020.
Yeah, and you've talked about there the business areas, some of which are doing better than others. In terms of regions, talk to me about the performance regionally. How's China doing?
Well, regionally, the Asian region in general has been the most spotty one. It really depends on which business you look at. I think consumer confidence continues to be at a level that is probably a little bit more cautious than it was before. Now, having said it, if I look at our decorative paints business in China, where we are a very big player, I would say it's very encouraging to see that in our Dulux line, which is kind of the mainstream premium part of our business, that actually showed growth in the third quarter year over year. So that is an encouraging sign. In the background, volume-wise, we're walking away from lower-end putties and all sorts of other big volume but low-margin products. But it is encouraging to see that this is the first quarter where we see again an uplift in our Dulux position. So Asia is probably the most spotty one, I would say, because we got so used to the growth, almost automatic growth in most of those regions. I would say the rest is pretty pretty stable, but they're often Turkey, Argentina, Brazil, the UK pound. We've seen quite some devaluations, so the currency foreign exchange rate has not exactly helped. But despite that, I'm very proud of the team that we delivered these increases despite all of these macroeconomic impacts we really can't control as a company.
And Thierry, something that you certainly do have some control over is M&A. You've completed a few bolt-ons. Is there any appetite for something bigger? There are rumours surrounding your competitor Axalta's strategic review. Any interest perhaps in parts, or is there a part of the Akzo portfolio that could use scale?
Well, the rumor around the competitor you just mentioned is not a rumor. They announced it themselves that they're doing a strategic review. I think we've been on record pretty clear, because there was lots of speculation that we are not part of that process. We have a lot of improvement potential in our business. Of course, we keep looking at all these strategic opportunities. The share buyback we just announced is a sign we have the firepower to do what we need to do in M&A. So the fact that we choose to go in this direction probably gives you a bit of a hint on where our minds is versus what M&A is. We continue to give the preference for strong bolt-on acquisitions like the MAP Aero acquisition, French company in aerospace, which is really smack in the middle of where we think is our home field, where we are very strong. Bigger projects like the one you just mentioned, we keep looking at it, but for this one at this moment of time, we continue not to be part of that process. We have a lot of items to do internally, and I think we want to get ourselves process-wise, infrastructure-wise, mentality-wise in shape, so that in 2020, if we do these kind of bigger steps, or if we were to get those opportunities, we would also derive the value of it that we can hand over to shareholders then.